Well, raising interest rates tackles inflation quite rapidly through strengthening the pound or making it weaken less than it would otherwise. So import costs are lower. Energy is, of course, some of that's imported. So that's particularly important to reduce the cost of that, but other imports as well. And over the longer term, you reduce the rate of growth in the money supply by having higher interest rates. And that means that there's less money to go around. Inflation is too much money chasing too few goods. So other things being equal, you would expect inflation to be lower as a consequence.
Now, the US raised interest rates, of course, by a similar degree. That, to some extent, tipped the United States into 2 consecutive quarters of negative growth, what most people would refer to as a recession, although I noted that the White House is trying to redefine that at this point. Is this not a risk that the Bank of England will tip the United Kingdom into a more protracted or indeed a deeper recession than otherwise would have been the case?
Well, the Bank of England itself is forecasting that we now get 5 quarters, not 2, 5 quarters in a row of recession. So all through next year, the economy would be contracting on their forecast. One of the it's the main reason why we're going to end up with a recession is because inflation's so high. So that's eroding people's real wages, it's increasing taxes a lot, and it's damaging the way the economy functions. So that's the main reason why we're going to get recession. Another factor there, of course, is that, which would speak to some of the issues in the Conservative leadership election campaign, is because inflation is so much higher than expected, that's dragging a lot of additional taxes that weren't initially expected. So taxes are rising much faster because VAT receipts are going up, corporation tax receipts are going up, and people are being dragged up through the income tax bands. And that means that we're getting a very rapid rise in taxes through this period. That itself will tend to mean that we get recession. A recession means that interest rates in the end won't rise as much as they would need to otherwise in order to conquer inflation. So the way I would think of these things is kind of the other way around. What's happening here is the recession will mean that which partly induced by the inflation and the tax rises, will mean that the Bank of England won't raise the interest rates as much as they would otherwise. What we want is for interest rates to go up. So what we should want is a little bit of a reduction in the tax rises, say 30 billion or so, perhaps cancelling the corporation tax rise for a start. And that will then mean in turn that we get interest rates that go up a little bit higher. And that's what we want.
So currently, what we're expecting is that this 30 billion of headroom within the fiscal rules of the Treasury is going to be wiped out by this interest rate rise. The cost of borrowing for the government, of course, getting more expensive. Up until now, Liz Truss has been saying that her plans to cut taxes fit within that fiscal headroom. Is it not a problem for her now that fiscal headroom has been wiped away by interest rate rises?
I think that in the end, what we'll see is that the government will underestimate the extent to which the rise in inflation means that you get increased tax rises. That tends to happen. They're often a little bit conservative with those things. So, but the more fundamental question here, I don't think, is do you have room to do £30 billion on a long-term basis? That is in terms of the structural impact. I don't think we would want to never raise taxes again from the situation that we got to. The issue is whether you want to have the taxes rising now. And I think that that it would be better to seek to have not so rapid tax rises now, see if as a consequence you can get slightly less recession, and then get the interest rates a bit higher. It's to do with the policy mix. I think some of these questions that we have about the long-term status of the fiscal position, that's the wrong way of thinking about the question. It's a very treasury-oriented way of thinking about the matter. For now, what we want is a question of macroeconomic management. And the right macroeconomic mix from here is, in my view, slightly less tight. We're not talking about loose fiscal policy. We're talking about slightly less aggressive reduction in the deficit.
And then a tighter monetary policy. Just finally, in this conversation, Andrew Lilico, I wanted to get your reaction to something that Rishi Sunak is on the record saying. We have a clip that we're about to play of the former Chancellor speaking about intervening, about asking the Bank of England to raise rates. Let's have a listen.
I mean, they are rising. And they do need to rise.
Well, the question
You're not attacking the fact they're rising.
Of course they're rising. I support a central bank acting as I've told them to act, forcefully to control inflation. So, and that's what I did as Chancellor.
Now, briefly, if you would, Andrew Lilico, what does that mean? that Rishi Sunak, as Chancellor, is saying he asked the bank to raise rates?
Well, there'd be two kinds of interpretations there. One would be that he tried to encourage them to raise interest rates. That's the interpretation he wants you to sort of believe, that he encouraged them to raise rates and that it's not all his fault that inflation's gone as high as it is because he was trying to get the bank to raise rates earlier. I don't think that that's very plausible. If he really had been doing that, that would be a massive story, because that would suggest that the process of Bank of England independence had been undermined secretly in the background, because he wasn't writing any. He got the chance to write letters every month or few months to the Bank of England telling him. He could have put in a letter that he wanted to tell them to do that. But the idea that he'd been secretly telling them to raise interest rates would be rather inflammatory. I suspect what he really means is, in a general sense, he wanted them to keep inflation down. So therefore, he was in favour of them tightening. But even that's a bit weak. Because the blunt reality is the Bank of England didn't raise interest rates. It took its eye off the ball. A lot of people are, and I was on your show repeatedly warning that inflation was going up, and the government did nothing about it, never actually openly criticised the bank for not raising rates fast enough. And the bank has allowed this situation to arise. It's just implausible that you can have an inflation target of 2%, that the inflation goes to 13%, and you claim that somehow in a vague sense your inflation target kept inflation down. It just obviously didn't.